You don't live in a democracy. You live in a financial system. One that decides who wins wars, who builds empires, and who stays poor. It doesn't wear a crown, and it doesn't need an army. It rules through contracts, credit, and quiet compliance. Most people never notice it because it doesn't need to hide. The greatest trick money ever pulled was convincing the world it was neutral. Convincing the world it was neutral. This is the financial historian, where money, power, and history collide, and nothing is ever as simple as it looks. We were taught that money is a tool, a measure of value, a way to trade one thing for another. But what if that's the myth? What if money isn't just a tool, but a system of control, one designed not to measure value, but to extract it? The story of how that system came to rule the world isn't about villains in boardrooms. It's about centuries of quiet engineering, by merchants, kings, and bankers who learned how to turn promises into power. To understand it, you have to go back to when money was still real, when wealth was tangible. Gold, silver, salt, grain, things you could touch, trade, and store. For most of human history, money represented something concrete, labor, land, or metal. If you wanted more, you had to earn it or take it. Then, slowly, a new idea emerged, one that would change everything. What if money didn't have to exist as long as people believed it did? The first glimpse of this illusion came in China, under the Song dynasty around the 11th century. The empire grew so vast that hauling metal coins across it became impossible. So the government began issuing paper notes, slips of promise, backed by nothing but imperial decree. It worked. The economy expanded, merchants got rich. But when too many notes were printed, trust collapsed, and with it, the currency. The experiment was shelved, temporarily. Centuries later in medieval Europe, merchants in the Italian city-states rediscovered the power of promises. Transporting gold across dangerous trade routes was slow and risky. So they invented letters of credit, written pledges of value redeemable elsewhere. It was safer, faster, and invisible to bandits, but more importantly, it was profitable. Because paper can multiply in ways gold never could. That was the birth of the modern illusion, the separation of money from matter. And no one mastered it like the Medici. In 15th century Florence, their family bank became the beating heart of Europe's economy, financing kings, popes, and wars. They pioneered double-entry bookkeeping, an invention that sounds boring until you realize it changed civilization. For the first time, money could be created with ink instead of metal. Every loan became an asset. Every debt became wealth. The Medici didn't just record value, they manufactured it. And in doing so, they quietly replaced monarchs with merchants. But the Medici were only the beginning. By the 1600s, money had evolved again. The Dutch Republic, a tiny, windswept nation, turned trade into empire by creating something new, the joint stock company. The Dutch East India Company sold shares to investors, pooled their money, and built an empire of ships, spice, and silver. Ordinary citizens could now invest in global conquest without leaving home. Profit was no longer tied to work, but to ownership. The company became richer than kingdoms, and for the first time, the line between state and corporation blurred. Soon, England copied the model and perfected it. The British East India Company became a hybrid of government and business. It had armies, taxes, and its own currency. It didn't just trade goods, it governed people. In the process, London became the new center of global finance. Behind the Union Jack, balance sheets ruled the seas. But the real turning point came in 1694, with the creation of the Bank of England. The government, drowning in war debt, turned to private financiers for help. In return, those bankers got the right to issue notes, paper money, backed by the state's debt itself. It was a brilliant paradox. The more the government owed, the more money it could print. Debt wasn't a weakness anymore. It was the engine of empire. For the first time in history, nations could expand faster than their economies. War, once limited by resources, became limitless, because money could be created out of thin air, as long as someone believed in it. From that moment on, money and power became inseparable. Kings no longer ruled bankers. Bankers ruled kings. By the 18th century, the architecture was complete. Gold became a reference point, but paper was the reality. Every banknote was a promise, a claim on metal stored somewhere else, though few ever saw it. The system worked because people agreed not to question it, and as long as that faith held, the machine could grow indefinitely. Then came the industrial era, and with it, scale. The 19th century saw the rise of global banking dynasties, the Rothschilds in Europe, the Morgans in America, the Barings in London. They didn't just lend money, they brokered peace, funded revolutions, and financed both sides of wars. Their true product wasn't gold or bonds, it was trust. They understood that money was never really about metal, it was about confidence, and confidence could be manufactured. Every crisis reinforced their power. When governments went broke, bankers rescued them in exchange for control. When markets crashed, they stabilized them at a price. By the end of the 19th century, the world had entered a new order, one where nations still existed, but the real empire was financial. The flags were symbolic. The credit was real. The 20th century only tightened the grip. In 1913, the United States, a rising industrial giant, created the Federal Reserve. Officially, it was a public institution meant to stabilize the economy. In practice, it gave private banks the authority to issue public money. The government no longer created currency. It borrowed it with interest. Printing became policy. Democracy became debt management. A few decades later, World War II rearranged the global chessboard. In 1944, world leaders gathered in Bretton Woods, New Hampshire, to build a new economic order. The US dollar became the anchor of global trade, pegged to gold, while every other currency pegged to the dollar. On paper, it was stability. In practice, it made the entire world dependent on American policy. Whoever controlled the dollar controlled the system. And when President Nixon ended the gold standard in 1971, that dependency became absolute. The dollar was no longer a claim on anything, just a belief. Fiat money was born, currency backed not by metal or productivity, but by faith. Money had finally become pure abstraction. And in that abstraction, power became invisible. For the first time in history, the system no longer needed resources to grow. It just needed credit. Governments borrowed to spend. Corporations borrowed to expand. Consumers borrowed to live. And the world kept spinning, not on wealth, but on debt. That's the system trap, a structure so vast and self-sustaining that it doesn't need to conspire against anyone. It just needs everyone to participate. Every paycheck, every mortgage, every credit card balance feeds it. You can't see it. You can only feel it. In the cost of living, in the price of time, in the quiet anxiety that no matter how hard you work, you're never really ahead. Look around. Every modern life is built on debt. Students borrow to enter the economy. Homeowners borrow to stay in it. Governments borrow to sustain the illusion of growth. And the more everyone borrows, the more valuable the money becomes for those who issue it. The cycle feeds itself. New debt pays old debt, new credit creates new power, and every dollar of interest flows upward to the institutions that can create money faster than anyone else can earn it. You can't see the rulers of the system because they don't look like rulers. They wear suits, not crowns. They meet in boardrooms, not palaces. And they rule through numbers, not laws. The modern state, the market, and the central bank are now one entity, a symbiosis of convenience. The government spends, the central bank prints, the market inflates, and the bill is sent to everyone else through inflation. That's the quiet tax on the unaware, the slow theft of time and labor disguised as rising prices. We think inflation is random. It isn't. It's design. It's how the system resets without reforming. Because when the system prints too much, it needs to erase debt without saying the word default. Inflation does that silently. It punishes savers, rewards debtors, and keeps the wheel spinning. Every decade, the middle class loses a little more and the wealthy gain a little less. But in absolute terms, they never lose, because they own the assets that rise with the tide. The 2008 financial crisis made this clear. When the system collapsed under its own weight, governments didn't punish the gamblers. They rescued them. Trillions of dollars were created overnight. Not to save the people who lost homes, but to save the institutions that created the bubble. Central banks called it quantitative easing. In reality, it was debt reincarnation. Money conjured from nothing to preserve everything, and people accepted it because they had to. There's no revolt against the currency you're paid in, no rebellion against the bank that holds your mortgage. The system doesn't survive by violence. It survives by dependence. You can opt out of politics. You can't opt out of money. The next evolution of control isn't coming. It's already here. Digital money, central bank. Digital currencies, CBDCs, are being tested around the world. They promise efficiency, transparency, and convenience. But they also erase the last illusion of privacy. Every transaction recorded, every purchase traceable, every account programmable, money that can be frozen, redirected, or deleted with a few keystrokes. It's not a conspiracy theory, it's policy. This is the logical endpoint of a 700-year journey, from gold coins to credit cards, from merchant ledgers to blockchain algorithms. The same mechanism, perfected. The only thing that changed is how visible it's allowed to be. In this new order, freedom becomes conditional. Not by decree, but by design. A programmable economy where incentives replace laws, where your score replaces your sovereignty, and where compliance is built into code. And because it's efficient, people will accept it, just like they accepted the printing press, the central bank, and the idea that debt equals growth. That's how the system trap works. It doesn't demand submission. It makes it comfortable. Meanwhile, the narrative continues. Endless distractions about left and right, rich and poor, good and evil. But the real division isn't ideological. It's structural. Between those who understand the system and those who live inside it. The former shape reality, the latter experience it. And here's the twist most people miss. There's no single villain. There's just momentum. The system doesn't need conspirators. It runs on incentives so powerful that good people follow them without question. Politicians chase growth because voters demand it. Banks create credit because markets reward it. Consumers take loans because survival requires it. The cycle continues not because of greed, but because of gravity. That's the genius of it. The trap isn't external, it's internal, built into our ambitions, our habits, our hopes. Every time we borrow, spend, or save in a currency we don't control, we participate. Every time we measure success in dollars, not value, we reinforce the very power we claim to hate. But history offers perspective and hope, because no system of illusion lasts forever. Every empire of credit eventually collapses under its own contradictions. Rome debased its currency until soldiers demanded payment in goods. The French monarchy printed assignats until bread riots consumed Paris. The British pound ruled the world until the cost of empire exceeded the means to finance it. Every time, the pattern ends the same way. Belief breaks. When that happens, the people who survive aren't the ones with the most money, but the ones who understand what money actually is. Not wealth, but trust. Not power, but agreement. The moment that agreement fractures, the system resets, and those who saw it coming rebuild from the ruins. We may already be close to that breaking point. Debt levels are historic. Inflation is structural. Nations borrow to pay interest. Productivity stagnates while paper wealth explodes. The illusion holds, but only because we've never known anything else. So how do you escape the system trap? You can't destroy it. You outgrow it. You learn its logic. You stop confusing digits with value. You build things the system can't print: knowledge, skills, relationships, real assets, independent thought. The more of those you own, the less control it has. Because the one currency it can't inflate is awareness. Money rules the world because we let it. But history reminds us, every system that rules eventually serves. And when this one breaks, as they all do, the people who understand the past won't be victims of the collapse. They'll be authors of what comes next. History doesn't repeat, but if you don't understand it, it'll crush you all the same. If this gave you a new perspective, hit subscribe. History has the answers. I'll show you where to look.